powered by Reviting, streaming from the Reviting Digital Studio. It's the David Daily. Exploring frontier technology, artificial intelligence, quantum innovation, and the intersection of faith, funding, and the future. Here's your host, David Goki.
Good morning, good afternoon, good evening, wherever you're tuning in from to the David Daily Show. Today we have another wonderful episode of Funding, Faith, and Future. And if this is your first time tuning in, we appreciate you joining the show. We have a sponsor from Headset Advisor. I'm wearing the Headset Advisor today. If you have not checked out these headsets, I would go on over to headsetadvisor.com and check out the headsets they have there. If you're on calls or you're mobile, you walk around, it's very high quality audio. This particular one's the HB64 Yale Yank. We absolutely love this. Without further ado, I'm going to go ahead and bring up Igor on the stage. Igor, welcome as our special guest today.
Hello, David. Thank you very much for having me. Very excited to be on the show.
Yes, I'm excited to have you as well. We're going to get into some fantastic conversations today. And just before we were on live, we were just chatting in the green room a little bit about running. You're a runner, which is so fun. I love chatting with runners. I don't know, us runners have like a tenacity. We have a longevity, a perseverance that that non-runners don't understand. Anyone in other sports, they're always like, okay, your sport is our punishment.
Definitely. But it teaches you a lot for life. So I think it shapes the character when you do that, especially as a young person.
Yeah, wonderful. Well, why don't you go ahead and introduce yourself, Igor? Tell us more about yourself. Igor Pejic here, live on the show.
Yeah, so for those who don't know me, I usually sum it up in 3 words. So I'm a tech author, a speaker, and a banker. And basically, I did spend my entire professional life at this intersection of technology on the one hand and finance and money on the other hand, starting in management consulting, going through different management positions. And since 2015, however, I was not just doing my day-to-day job, which I love, and I love the, this area of finance and technology. I wouldn't choose any other one, but I wanted to go deeper, and that's why I started really looking much more deeper in a systematic way into cutting edge emerging technology, especially since one technology back in 2015 caught my eye and really inspired me, which was blockchain. And then it resulted in my first book, Blockchain Babel, 2019. Have my third book coming up in May, in end of June, called Tech Money. So I'm really trying to go deep into those topics, and I'm speaking a lot. I'm very grateful that I did get the chance to speak to many leading voices in both technology and finance around the world because of the work I'm doing. So I'm really, yeah, you could say I'm a bit of a tech nerd in that sense.
Nice. I love myself a good tech nerd, especially on the show here where we focus on 3 main categories of topics, which you're an expert at. So we're excited to have you here: funding and faith and future tech.
Time to talk about funding.
All right, we're going to tap into that third title of yours, banker. I love that you're an author, a keynote speaker, and a banker. And you're also in Vienna, Austria. So why don't you tell us just a little bit about your banking experience and funding, and then we're going to get right into this topic of timing investments in emerging technologies.
Definitely, being on that side, because many people that deal with technology are usually those that are on the other side, that are entrepreneurs or that are working for tech startups. But I found that you can just as much be part of the whole technological world and those breakthroughs that we're living at the moment while being on the other side. And I think that they are... Yeah, there's 2 things. On the one hand, of course, the banking and generally the investment world is providing the capital, the liquid that is actually enabling all of those technological advances and progresses. But on the other hand, it's also an industry that has been quite substantially disrupted and changed over the last, well, I'd say 15 perhaps even more years when we look at the term fintech and so on, and all of the things that are going on at the moment are definitely changing the financial system from the ground up. They are introducing really paradigmatic changes. So I think this was kind of the start where I came from. I really started from looking at the disruption happening in the industry, and then transitioned, also a little bit into looking more deeply into technological cycles and the theory of technology and technologies more broadly, because I think there's so much more than just looking into one specific technology, because we are having an exponential age in terms of breakthroughs, and also those breakthroughs are increasingly feeding off each other. So I think that today, really, the major or most important thing to do is really to look at it from an integrated standpoint and look at multiple trends and multiple technologies that are maturing. So this is kind of the angle where I'm coming from. And as I said, it is the major driver, the major engine of technological progress is the money flowing into it. And we are seeing a steep increase there as well, and we will continue to see this increase, and that's why I'm also so excited to be at this intersection. The main question for me, and that's my current project, is also to understand or help people understand the technological cycles, the technological waves, those rules of progress that are repeating themselves over and over again, in order to make the most out of it and to have a good financial return by understanding those cycles perhaps earlier than the others.
Earlier than others and emerging technologies, that's one of the reasons why I started this podcast, was to discuss exactly that, emerging technologies, especially to your point, Igor, all of this funding that we're seeing both internationally and, nationally and globally. So maybe we can dive in just a little bit. I really like your LinkedIn banner where you say, you're at the edge of emerging technologies and keynote speaking about it. So what global trends are you really seeing in investments in future technology? Which industries should we be really thinking about from a global perspective?
Yeah, it's very interesting to see, and I think that's actually a very healthy and good trend, is that we don't have one or two industries or segments or technologies around which money is coalescing, but it's actually a plentitude of this. And this holds true whether we look at VC funding, right? So very early stage funding, usually also companies that are looking into more frontier technologies, so very, very cutting edge. But it also holds true when we look at IPOs and also the companies that are already public. We're seeing multiple trends. And just to give you the concrete examples for IPOs, because 2026 is supposed to be the mega year in terms of IPOs, bigger than all of the other previous years, where we have mega IPOs, especially driven by AI, of course, with SpaceX, with Anthropic, OpenAI, and so on. But we also have a lot of biotech companies coming up. We also have space companies, of course, with SpaceX and XAI and this merger. But we also have a lot of fintech companies that are, maybe still not confirmed, but that are rumored to be going in there. We have energy companies, especially nuclear tech companies. So there's a lot of different fields. Many of those are also benefiting from the rise of AI, because AI, as we might discuss later on as well, is a so-called general purpose technology, which means that it's basically radically impacting and disrupting not just a couple of industries, but pretty much every industry out there. So AI is really the big driver, but we're seeing this change happen in so many different fields and different domains. And again, as I said, it's happening on all levels of maturity, whether that's private companies with VC money, whether that's companies going public that are at the transition of becoming those big guys, or whether we're looking at big tech. We're seeing the very same trends, and of course, driven primarily by the tremendous AI progress and tremendous AI funding that we're seeing.
Yeah, that's incredible. Hearing you say, 2026 is the year of IPOs, initial public offerings, both in the United States and globally. So I don't know, Igor, are we too late to the scene for AI investing? Can money still get in, or do you think we're at that maturity phase where the majority of the players have been named? We have good industry structure. I mean, are people too late to get into the AI investment space?
I wouldn't say so. I wouldn't say so. So the question is always, what is your goal, right? If you're a trader, it might be dangerous, right? Because who knows? Maybe AI is a bubble. There's a lot of talk about
Right.
AI being a bubble. Quite frankly, even if it is, I'm pretty sure it will not be as severe as we've seen in the past, like the dot-com bubble. But if you're a long-term investor, right, if you're looking at an investment horizon of, let's say, 10 years, 20 years, 30 years, then I don't think that AI, if you diversify correctly, I don't think that AI is something that's already run away. I think we're still at the early stages of the trajectory. I mean, it's a bit weird to say that we're at the early stages of a technology that's been around pretty much since the 1950s, but we're at the early stages of this hypergrowth phase. I'm pretty sure that we will continue to grow, and it's very, very important, however, to distinguish between, on the one hand, the financial markets, the financial performances, stock prices, but on the other hand, the progress in technology, and on the other hand, as well, between the sales growth and the performance of individual businesses. Because AI and Gen AI, this is a technology that is a very, very strong and very productivity enhancing, right? So the utility value is very strong, and we're seeing this also already in the income statements of many companies, because corporate customers in particular, but also retail customers, are willing to pay for this technology because it's providing a real value. And as soon as you're seeing people and companies paying for something, then it has an impact, and will have a lasting impact. And again, we are, I believe, still in the early phases because we have still so much dynamism. If you want to look at it through the prism of management theory or innovation theory, you could say we're in the age of dynamism and informant, where we're basically trying to figure out what is the right way, what is the best architecture of chips, what is the best way to teach LLMs. So there's a lot of open things, and I'm pretty confident that over the long run, I'm not saying now next couple of months, but over the long run, we will certainly see a growth in this industry.
I love hearing that. It reminds me, actually, recently we have had some astronauts circle the moon, and some of the comments they're saying is like, the Earth is just so small in the grand scheme of the universe and the world, and the galaxy is just a new world. And even just 100 years ago, I was watching this Side Hustles from 100 years ago, and it was 25 things you need to know on the farm that every farmer in the world knew. So if we're just on this early cutting edge, emerging AI technology, how do we make sure that people make the right bets, in the future? So what are some key things as a banker you'd be really looking to for advising investors and angels who are watching the show to say, these are some of the key considerations you really want to make sure, maybe some of the banking fundamentals you want to make sure that you're investing into, especially with R&D credits, these future long-term technologies that might have a longer ROI. What are some of those key fundamental things you're really looking for, Igor?
Yeah, excellent question. So I think, the number one is obviously diversification, because the earlier in the trajectory we are, the more important diversification is. But diversification is often misunderstood, right? It's not enough just to buy stocks, let's say, of Google and Amazon and maybe in the future of XAI and so on. You also have to diversify across different kind of sub-technologies in AI, different kind of approaches, because at the moment, many of those are very similar. You also have to diversify across different levels of the supply chain, right? So on the one hand, invest in those hyperscalers like Google, like Amazon, like Microsoft, who have this cloud computing muscle that benefit whoever wins the race. Then also in terms of chip manufacturers, NVIDIA, now Google is there as well. So Google really seems to be turning into an AI super actor. But then you also have other companies that will provide applications. I think it's still very early on, very difficult there to get things right. But it's very important, as I said, to diversify across different levels of the supply chain, different technological angles, and then, of course, different companies. Now, in terms of, also the trade-off between stability and upside potential. I think there are in the market, there are some asymmetric bets, which is the holy grail. So you're looking at companies or investments or assets that have maybe a big downside potential, but it's limited. But on the other hand, they have an upside potential of 10x, 100x, and so on. So that can really go through the roof. And where I think this ratio is very good is in these hyperscalers at the moment, in particular, again, these Googles, Amazons, Apples, because if AI really turns out as successful as a technology as I believe and many others believe it will, then they will benefit tremendously. But at the same time, if it doesn't, Google will always survive, right? They can put hundreds of billions of dollars into training their large language models, and even if they blow it, they can still be standing. I mean, just ask Mark Zuckerberg and the $100 billion he burned in search of the elusive metaverse. So this is kind of also a risk management technique, but guaranteeing that you will get the upside. Another approach is just to index, right? Just buy the S&P 500 index or the NASDAQ. Those are so heavily dependent these days on AI stocks then that inevitably they will partly share the fate of this one technology.
Yeah, I think sometimes it's easy to hyper focus on AI, but emerging technology is so much more broader than AI, right? So what's interesting, and as we get into the future tech side, I'm very, very excited to talk about breakthroughs as well. But on the funding side, let's just kind of break this down for venture capital and funding. What is, from your perspective as a banker, one of the biggest lies or mistruths that you hear about venture capital?
Well, I'm hearing, I don't know if it's a lie, but I think it's maybe misleading a lot of people, is that we have these tremendous private capital markets, and that many more companies are staying private for longer. I mean, that might all be the case, but at the same time, what people forget there, and that's very crucial, is that all these new technologies require that much more capital to begin with. That's why eventually, whether that's, and it doesn't matter whether it's space or nuclear tech or whatever, they will have to tap public markets sooner rather than later. So I think that, VC, that's one of the big, if you want, the macro topics. It is there, it is increasing, but at the same time, there is a limit to it. And that's what people often don't understand or forget.
Yeah, I totally agree with you on the private markets and them being a source of funding for emerging technologies and in big tech. But you're exactly right. If you really need that real full swing capital, then an IPO, going IPO is, one way to, of course, raise that capital. So I'm curious, from your perspective, at what point does it make sense for a company or organization to IPO from a kind of a banking perspective? Like, what are some of those banking finance fundamentals that you'd say, what, this company, they're Series B, Series C, maybe they've had 5, 6, 7 rounds of funding. At what point do they say, hey, we really need to tap into the full potential of the global markets to raise money?
So I think the way I like to think about it is, or the major factor I look at, is sales of a company, right? How successful is it in selling its technology? Not necessarily profitability, though it's nice, right? It's always good if a company goes public when it's profitable. But we know from research that the number one indicator of good post-IPO performance is if a company has sales, usually some place north of 100 million. Billion in sales. So sales is really the biggest thing. The second thing to consider is also, of course, governance. And these days, especially tech IPOs, you can still keep a lot of how do you say, a lot of founder rights, a lot of through those dual class shareholder structures, right? You can still you can still go a long way without having to deal with activist shareholders and stuff like that, and still keep the brand of the founder and the vision and so on. That's also important to consider. In terms of financials, again, it's always the question, what is the cost of the capital that you have as well. So from a founder perspective, maybe I can get it in the private markets, and I also have then less transparency requirements, which is always also a cost issue and being an agility issue, right? But as soon as you're public, you have to pay very heavily for auditors and stuff like that. And also you have to reveal certain parts of your strategy. So it's a little bit easier to stay under the radar if you're private. So there's a lot of considerations, but eventually it's really, how urgently do you need the capital, and are there other ways, cheaper ways to get it or not?
Yeah, that's a good perspective. I was just, you may have seen me shuffling around. I have my introduction to accounting college accounting here book. And I think it's from the 1800s. This thing is just so old. It just smells so good. But my next question for you, Igor, is what does your balance sheet look like today? Are you focusing more on liquidity versus long-term debt?
Liquidity, I think, is kind of having the upper hand here, right? Because you need the cash. That's what
Yeah.
we're seeing now more and more, especially in tech.
Yeah, I asked that because it's also interesting. Let's now juxtapose that to this government long-term debt financing for these hyperscalers, saying, you know what, okay, I heard you kind of correct yourself. Instead of 100 million, 100 billion for going IPO, there will be a world, I think even in our futures, where inflation will get us to, you'll need $100 trillion to be able to go public. I just think we're going to get to that place, especially with the rate of inflation. I don't know, maybe we could debate that as well. But from a funding point of view, you see these government entities, these call it nationalists, right? Organizations, countries that are making heavy bets into long-term technological needs for data centers and chip manufacturers primarily. What do you think the risk is for us globally to be investing so heavily with kind of government finance, government-backed bonds, that sort of a thing, where even I think OpenAI came out and was kind of raising their hand to say, yeah, we'll take some of that government money, and other companies around the world. What role have you seen in this kind of new world of economics, where there really aren't any economical trends to show us what you do post global pandemic, right? So what role does government play in some of these long-term financing arrangements?
Yeah, it's a perfect point. I think the government getting involved, I think with a big technology like AI, there's actually no way around it. But I think I, as an investor, I'm very weary every time the government gets involved in there. That's not to say that government has no role or shouldn't support technology and progress and research, but I think it should rather be confined to the early stages, explorative research, and so on. The problem comes when government is pushing for the adoption of a certain technology, because then it's doing something which is the core competence of the free market, because the free market is very good at figuring out what the market wants, right? Because if people are paying for this, companies will do more of it. Instead, if governments are pushing for something, that's always misreading the market, and government policy might and will change, right? Some maybe because they were wrong, maybe because another government comes in, maybe you have a war or something else and money is needed elsewhere. So that's really, I think, a huge problem. And it's putting the companies to problems as well, because of course you're going to take the government money. And the other problem with this, so on the one hand, it's really mainly maybe wrongly assessing the real demand for technology or technological standard. The other problem is that money is really, not used in an efficient way. If money doesn't count, if you have all of those resources, then you just throw money at problems instead of trying to figure them out in a different way. And Chinese DeepSeek is the best example, right? So they didn't have the resources of OpenAI or Google or whatever, and they just had a lot of tweaks to the chip architecture and some other things that they did differently, and they basically reduced the costs significantly by orders of magnitude. So there is a natural problem. If you have too much money into something, then the race just becomes, who can stack more chips, instead of asking, how can we do it differently? And that's that's an issue also not just in AI, it's also an issue with the whole green transitions that we're seeing that were very heavily funded by governments. Not only the taxpayer money was used to fund this, but for example, in the European Union, they would say we are abolishing the internal combustion engines for cars, and of course they will have to go back on this one because it's just impossible. But this is just a government overreach in the free market, and it's oftentimes, and we've seen this in history, oftentimes governments don't make the best decision in terms of what standard to back. In terms of EVs, for example, there are more environmental friendly options, for example, synthetic fuels and so on, but this was just killed instantaneously because the government said, no, we have settled on EVs for whatever reason, and we're pushing it. So definitely this huge investments can be a double-edged sword. And maybe just to add another point to government funding, there's also another funding trend which I find a little bit problematic at the moment, especially when we're talking about the AI space, is the circular funding that we're seeing, right? So you would get, for example, a chip manufacturer buying a huge stake in an LLM maker, in a large language model maker, but because they're giving them the money, they want the money to be spent on chips, which means that they are kind of artificially inflating the demand, which makes it a little bit more difficult to see what really the commercial need and the commercial necessity of or the commercial demand is.
I appreciate your perspective on that. I think it's always unique to hear a banker's perspective because you're thinking about all the financial things, right? The balance sheet, the income statement, profitability. You're talking about cost of capital. Even to your point, it may be sexy to go IPO, but there's a real cost there in auditing and that sort of a thing. The cost of capital. Okay, so before we go into faith topics, I'm very interested to hear your perspective on deal structure and kind of like how you see deals coming together. And one question that I think is interesting that many people watching this show will want to know is, okay, when do you walk away, right, from a deal? When do you exit, even when maybe the upside may look strong?
So you mean when you accept the deal as a founder, or
Exit, like so
exit?
when you
Okay, when you
exit,
yeah.
Yeah, from a banking point of view, like when do you say, okay, like I have, like, they say like take profit, right? Like cash is king. Like if you're trading in the market, it's like, okay, if you hit that 20% return in a day, like it's okay to like exit. You don't need to get those options going up higher. But in startups and finance, we have a handful of venture cap people who watch this and founders as well. So when do you exit a startup? When do you say, you know what, I'm going to take my money and go, or, I'm going to sell this company and go, or, maybe it's a new team that's going to come in and take over. And from a banking point of view, how do you really decide when to walk away?
Yeah, it's very difficult. I think you cannot really generalize. I think you cannot really say there is a magic number of it going up, or I have a return of XYZ. I think rather it's a case by case basis. But it also depends on what other options you have, right? A very big, usually most questions from a banker's perspective can be answered by looking at what is the opportunity cost, right? So of course, if I can stick with the startup, but on the other hand, if I do the exit, I have the cash, I could buy another one, I could start another one, I could take my knowledge and start something else that might have a higher return. The other thing is, if you what can you do? What other alternatives can you have? But it's also important to, put a number on what happens if you stay, if you don't exit, right? What is possible? What is likely? I mean, of course, the problem here is really to make an objective decision because in most of the cases you've worked with the company, or you founded it, or you've worked with it since the beginning. So you do have an emotional connection to it. You have sometimes tunnel vision because you've spent the last years and years and years of your life just thinking through this lens and through this perspective. So it is difficult to make the subjective decision, but I think it's one that cannot be generalized, and it's all about opportunity cost, right? What is the other thing that you would do with your money? And also then, of course, what is your life goal? If you just want to quit it and live your life of financial independence, that's also a possibility which is hardly ever happening, right? If you're a founder once, you're probably always a founder. So the real question is usually what other possible investments do you have, or other business ideas where you maybe see a bigger opportunity?
Yeah, those are really fantastic considerations, and the opportunity cost of your capital and your time so important, and surrounding yourself with the right people who can help you make kind of an objective decision. Really appreciate those perspectives. Well, we're going to move right along over to our faith topics here. And if you're just tuning in for the first time, we are here with Igor Pejic. His books, Blockchain, Babel, and Big Tech and Finance, have received massive recognition from the Financial Times, the Independent Press Awards, and the McKinsey-Financial Times Bracken Bauer Prize. His work appears regularly in the New York Times, American Banker, Forbes, and Bloomberg. It's a real joy to have you here. We're going to jump right over to our faith topic next.
Focusing on faith for a moment.
All right, faith and spirituality in tech leadership. That's our topic here during our faith segment. Igor, what does faith actually mean to you?
Well, I think it's quite important. So I'm a Christian, so it's of course quite important, and it's good that you're addressing this topic, because usually we only talk about the financial gains and not about the non-financial. And I think especially in investing, and even more so in tech investing, I believe that faith can play and should play a part in the role, and so I think also, maybe just to say that even financial returns and faith don't have to be, don't have to be contradictory, because hardly anybody is, investing and trying to get a good return because they want to buy another yacht or a Porsche or whatever. I mean, there are people like this, but I think the majority of people are just middle class folks who are trying to, create enough money for their kids so they can go to college, or to have a good retirement or a safety buffer in case they get sick or whatever. So I think the financial gains are also important to take care of our family and the people around us. And at the end of the day, this is also a quite crucial part of faith, because obviously we do have a responsibility for those people, and we have a responsibility for ourselves. So having those safety buffers, again, also helps in the end of the big society, because if something happens, we're not dependent on the taxpayer dollar going into our pocket. And yeah, there's a couple of things then to consider from a faith-based perspective. I think the most important one is, even if you're after the financial gains, which obviously all of us are, not to engage in any kind of harmful investments, or support companies that are causing harm. So, for example, I'm a big tech lover and tech investor, but I would never invest in things like social media, because of all the harm that they're doing, especially to teenagers and kids, and all of the cognitive decay that has been diagnosed lately in this generation in particular because of this. So I think there's certain investments that you should steer clear of it in order not to cause any harm. But it can go even further than this, right? So we can use technology for a lot of good. And that's why I think that investing, especially in tech, can be a very moral thing. And obviously, tech can be used for good and bad things, but I think that the good ones prevail, and especially if you choose your investments wisely. And just to give you some figures, I mean, there was an economist called Robert Solow in the 1950s, and he asked one of the biggest questions of economics. He asked, where does economic growth come from, right? Because everybody wants economic growth because it's a great leveling force. I mean, economic growth has basically heaved billions of people out of poverty recently. It has prevented many deaths, healed many diseases, and so on. Because there's enough money, people don't have to die out of hunger, and that they have access to medicines and so on. And he engaged, and he found out that usually, of course, technological it's the increase in capital, the increase in funding, or the increase in labor force that's basically pushing up the economic growth. However, he found out that these two factors only account for about 13% of economic growth. And the rest, 87%, were then known as the solo residual because he didn't know where it came from. And later it was found out that those 87% were actually accounted for by technology and tech progress. So I believe that, either working in tech or providing your time, talent, or money into this space, I believe can be a very, very big lever to make the world a better place at the end of the day.
Wow, what a bit. I appreciate you sharing all of that. It's very eye-opening to say, yeah, as a faith person, maybe I won't invest in organizations that have values or outcomes that have been statistically proven to cause harm. And social media is an interesting one as well. So how would you advise someone watching this show of any faith background who's considering integrating their faith values and morals into their work? How would you how would you encourage them to be bold in their faith and to get started integrating their faith values?
Yeah, so it's I think if you have a strong faith, obviously it's the basis for everything, right? So this is the foundation. This is the big questions that you have to get right, and everything else then flows from this, right? So you have to define the goal, and this is the most important thing. What do you have to have the clarity of the goal, right? So of course, getting money, the question is for what are you earning, and then the second thing, it cannot be only money. How do you get it? How do you do a positive impact in the world, right? And we could get into very theological discussions here about why I believe, especially that technological progress is a faith-based concept. I don't know if we have the time, but as I said, the most important thing here is to have this clarity and the motivation why you're doing this, because everything else, then is just a micro decision when compared to the big why, and to the big why are you doing this, and what's the motivation and what's the impact that you're having.
Yeah, I appreciate that. We could definitely get into a long theological conversation. Maybe we can have you over on another one of our podcasts in that space. But I'll say this. So building wealth and making investment decisions without losing your values, how would you advise someone to do that?
Mhm. Yeah, usually people say that money changes character. I don't think that's the case. I think it reveals the character, and
Mhm.
the tricky thing is really to see wealth and money as just a tool to get to your goals. And that's why I say it's very important to have the clarity of the goals, because
Right.
most people just start out say, I want to build this wealth because everybody else is doing this. And the reason is why
Right.
you just want to show off your wealth on Facebook, or you want to you want to have this fancy car, or is it because you want financial independence to spend time with your family, or do you want to give to charity? Because most super rich people become philanthropists at the end of the day, because that's kind of why many people are doing it. Many people are striving to be in these positions, because then they can actually change something with the money that they're
Right.
earning. They can make a difference. So yeah, it's just don't be distracted. If you're seeking advice, don't be distracted by all of the things going around you, because necessarily if you're successful and you're earning a lot of money, you're going to change the circle of people you're attending to, so the expectations are rising with it. It's this lifestyle inflation also. So of course, if you're driving a 20-year-old car, people will perhaps laugh at you if you're a CEO, but that's kind of okay. And I know a lot of CEOs that don't have a problem with this, right? And that's because
Right.
they have figured out early on why and for what they're doing this.
Yeah, well, to build on that, if that's the only thing you're chasing and there's no, to your point, goal, which with your accent, it sounds like you're saying go. So if you don't have a
Sorry.
go, which my last name is David Go, which is just fun. But my point was saying that, yeah, having values and ethics and an outcome as well that goes beyond just material possession is so important from a faith point of view. We all leave these material possessions anyways. So having a goal or an outcome or a purpose that's greater than yourself whether it is faith and religion, or if it's a nonprofit, or if it's a service-minded organization, something that you can do to really give back and contribute. Studies show that ends up becoming more fulfilling, and you end up really having more of a happier life when you do that, especially in the context of stewardship and generosity. So I'm curious, as a banker, you can speak from this type of a perspective. Some people have had these sustainability and environmental commitments for being carbon neutral. Some organizations have faith based commitments where they give to certain faith based organizations, maybe a certain percentage of their revenue or profits. For you, though, Igor, what do you sense that generosity and stewardship means for you?
Yeah, so for me, I mean, it's I think we really have to differentiate between, what you just mentioned, which is a real effect of what is kind of rewarding me, what's making me happy. If I, of course, handed a $20 bill to a homeless person, I will get instant gratification, and that's good. That's important that people do that. But at the same time, if I contribute, let's say, as I mentioned, to economic growth, that's a very abstract concept. But at the same time, it does have real consequences. And I think that technology in particular can be a great leveler. All right. If you, let's just say what, what they did in China with the smartphones, right? People like 10, 20 years ago, especially living in rural areas, they didn't have access to, for example, the banking system. They didn't have access to entertainment. There were no cinemas, obviously, on the countryside. But with smartphones, they had access to everything. They had access to the same tools as an investment banker in New York, for example. And they also could pay, they could have their savings and so on. So it was really a game changer for their lives. So I think when we talk about faith, and that's, yeah, maybe different from person to person, but I think, the impact can be immediate with an instant gratification, or it might be quite abstract, but also then on a large scale. So I think that that's always important to look at the impact of not just where you're investing, but what you're doing. And maybe just one last point, since you mentioned, organizations giving and these pledges and so on. I always prefer to, choose this by myself, because there's a lot of responsibility indexes and so on. But they not necessarily align with my faith or my understanding of what is good. For example, just to give you an example, I recently talked to a guy who created, let's say, he created a portfolio for his readers about sustainability, and I asked him, I looked at the stocks, and there was not a single nuclear stock. So I said, okay, nuclear energy provider in there, and he said, well, I don't consider this morally good. And I said, why not? I mean, your goal is to reduce the carbon footprint, to provide energy, and nuclear, for me and my point of view, it's one of the cleanest and best and most powerful energy technologies. But it's a lot of times it's just a very subjective point of view of people who are composing these criteria. So I, as an individual, I would always prefer to compose my own index or my own portfolio and look at the companies. And of course, it always depends on how much time and effort you want to invest in this. But I'm not a big fan of outsourcing this selection process.
Yeah, no, I agree with you 100%, Igor. It is such a wonderful conversation, especially for people who are considering being generous, or, after you get wealthy, thinking about what is that goal that you want to accomplish with your life, with your money, with your assets, with your resources, and how do those align with your faith-based values, your faith-based morals and ethics. So wonderful conversation. Well, you mentioned nuclear. We're going to get on to our future segment now.
Let's talk about quantum and the future of technology.
The future of technology, future tech is here to stay. This segment of the show focuses on key areas in the markets that we see opportunity for future, and just to have discussions about, from a timeless point of view, what technologies will we see in the future. So I'm curious, there's a lot of hype right now, kind of like there was back in the 90s around internet and technology, and now it's AI and automation and efficiency. Let's fast forward 20 to 50 years from now, maybe when our children or our grandchildren will be here. What emerging technologies do you sense you'll see in the future?
I like that question. It's a little bit sci-fi, but I think the first thing I would say is that whatever we imagine now, 20 to 50 years in the future, I think will probably come in the next 10, because we humans are terrible at understanding exponentiality and forecasting exponentiality, which is a good thing. I'm always very happy to see that the future is coming earlier than we think. Now, what are we going to see 20 to 50 years down the road? I think we will definitely have a very, very deeply ingrained artificial intelligence everywhere. I think that we will have hopefully made advances in quantum computing. And if we do, this will change everything. So, of course, we need to have the quantum advantage, not just quantum supremacy, but quantum advantage, where we have quantum computers being more stable and being able to solve problems, real life problems, commercial problems that a supercomputer can't. Because if we get quantum computing, then everything else will be supercharged. And one of those things that I believe will be supercharged or will go ahead anyway is space, and that's something that I'm certainly very eager to see, not just the exploration to Mars, but also the buildup of lunar bases and so on. And I think this will have a tremendous impact on many, many sectors. So not just on rocket launches and stuff like that, but when you have to build those lunar bases outside of our planet, there's many, many things that you have to do, and those things will then create innovations that will find their way back to Earth. For example, how do you grow vegetables somewhere on a different planet? How do you purify water? How do you adjust the cooling systems or the heating systems or whatever it is? So there's tons of different technologies that come with it. So I think space will be really the next frontier, and we will get there much, much faster than we think today, because I'm convinced that we will find those basics like AI and quantum computing and so on. What I think will also be a huge accelerator is, again, space providing new possibilities for problems that we have here on Earth, things like energy. So we mentioned energy is a big issue, right? So we will have satellites probably flying around the Earth, producing permanent solar energy and sending it back to Earth, or powering at least decentralized data centers, and at the same time we'll have cosmic cooling. So this would be solving the energy problem quite quickly, and I know that Elon Musk is working on this already. So I think we will see a lot in terms of the compute basics, but also in terms of space providing really new possibilities and opening up a completely new frontier of technologies. Another thing that I think will be widespread is blockchain technology, in order to safeguard all of our data, transaction data, health data, and so on, and to make it really transparent and secure. And this is something that will go hand in hand with the other technological advances that we'll see.
I like that you're focusing on space travel and this idea that whatever ideas you have for 10 or 50 years from now can maybe be done in 5. I like the quote that most people underestimate what they can do in 1 year and underestimate what they can do in 10 years. It's kind of like, I have a long to-do list for today and I got a lot done, but next week when I look back at what I did all week, oh yeah, I was able to actually get a lot more done than I expected. So in the short term, yeah, going around the moon, investing into infrastructure for lunar infrastructure, and maybe extraterrestrial planetary civilizations is kind of interesting. So maybe we could just start with the infrastructure piece. So if we were to go to investing heavily into lunar systems, what infrastructures would we need regarding power, water, shelter, communications, lunar ice, and those sort of things, autonomous construction without humans, these types of things. What types of financial, institutional, and maybe kind of global considerations do we need to be thinking about before we can create these and what infrastructure needs to be there that will pave the way for space to thrive?
Mm. Yeah, I really like the way that you formulated the question, right? So instead of seeing this big, vision of space, we need to think, how we get there. What are the big
Right.
technological vectors we need to see? I think one is definitely, the compute, which I mentioned, the AI and hopefully quantum one day, which is a little bit farther away, I guess. We will also need energy. You mentioned it. We will need robotics, right? So we will definitely need advances when it comes to robots, autonomous robots. And I think in this case, what we will be seeing, and we're seeing it right now, that there's a lot of innovation again coming from wars. We've seen this throughout history. Actually, wars, as terrible as they are, they usually produce a lot of new innovations because a country puts its entire resources simply because it's such an existential threat. And we've seen it with drones, also software that is coordinating massive swarms of drones and autonomously flying them. And we will see this, I guess, also deployed then later on in space. So we'll see autonomous software, we'll see robotics. That's important. We've mentioned energy. We need to get this energy supply and bottleneck solved, because at the moment, the biggest bottleneck even in AI is energy. Right? It's not the chips. It's not the money. It's just we don't have enough energy. I mean, the CEO of Google recently said that we need 99 nuclear power plants only for Google's AI efforts, and this is just one company. So this is a massive energy problem that we're having. I don't know if this will be solved simply by producing more, or as I said, by new structures. But if we want to progress as a civilization, as a human civilization, we'll definitely need more energy. And I believe that a lot of this energy can come from space as well, reliable energy. And communications, you mentioned communications, so we will certainly need communications, even outside of our planet, and this will be also decentralized and autonomous communication, so that those robots then can talk to each other. I think that's also very critical because we can't have a human coordinating everything.
Right. Yeah, you mentioned robotics. What is your perspective on the future of robotics?
Yeah, I think I think it will grow significantly. We already have, and then most people don't know this. Amazon has 1 million robots already in place in the U.S. I mean, 1 million. That's a lot of robots. By the way, more than all other U.S. companies combined. So robotics is already here. It's being deployed, and it's obviously a very wide term. It can be used on factory floors. You can use it also. Some define it also as exoskeletons, so robotic parts that extend the human capabilities. You will have a drone is technically also robotics. So basically, it's an autonomous machine that is doing something, and I believe, we will send a lot of those machines also outside of planet Earth to do those things themselves. For example, like repairing satellites or exploring other planets. But here on Earth, they're gonna be just as important, even if not more important. And usually, when people talk about robotics, they think about Pepper, this Japanese robot who helps you in your households. I mean, maybe we'll get there one day, but usually, and we know this from the history of technological progress, usually those first applications and biggest applications are in industry, because they're quite expensive and you need companies to be able to pay for them, where they do tasks that really save time, which in other words means they save money. And then you get those scale effects, and then the robots get cheaper, and then they have their mass market moment, and then maybe one day they'll get into households. But I believe that their primary application in the near future will be on factory floors, which has already started, by the way. If you look at Tesla and their production sites, it's completely automatized as well.
Yeah, I like that idea that robotics can definitely help to automate, for example, picking from the warehouse floor for Amazon to put on the conveyor belt to ship to you, right? I have a family member who works in these factories and knows them quite well. And so, yes, absolutely, this can be helpful. Now, the consumer adoption, I did see some very interesting things where you have like this robotic dog that's very lifelike because they've made the exoskeleton of the dog quite lifelike, and the movements are very, let's call it maybe more, animal-like. So I do think that we'll be able to get there. There will be, as Malcolm Gladwell says, a tipping point, I believe, in which robotics will be more widely adapted and considered, appropriate for everyday use. It was interesting. I saw recently a Chinese marathon where they had a robotics marathon competition. I'm not sure if you saw this, but the one guy who won the robot that won completed the marathon in less than 1 hour. That's kind of scary. I don't know if I want someone running 26 miles in less than 1 hour, especially if that robot is strapped with, I don't know, some sort of dangerous material. But I digress. We are running a little bit out of time, so we're going to move over to our rapid fire segment and close this down, Igor. This has been, by the way, a wonderful conversation, and yeah, lots of innovative little clips that we've got here. So we're going to go into the rapid fire. Are you ready?
Yes.
Okay, 3 quick levels. Just think about what comes first to your mind. No hesitation. All right, so write or invest?
Right.
Conviction or consensus?
Conviction.
Data or narrative?
Data.
Audience or capital?
Capital.
Teach or deploy?
Teach.
And macro or micro?
Macro.
Okay, you're doing great. This is awesome. You got conviction. I like it. Okay, what tells you a signal? So level 2 is more thoughtful, but more of an applied expertise. So what signal tells you that a trend is real and not hype?
There's a couple of those. I think the major one is adoption of a technology, right? If people are not only using it, but they're also paying for it. I think this is the gold standard. How many people are paying for something?
Yeah. Biggest misconception about modern banking?
That banks are dinosaurs. I hear this all the time, but actually banks are, they usually pitch the fintechs against the banks, but I think that's a bit inappropriate because many banks, not all, but many have done a really great job in innovation and being out there.
What makes an idea worth writing a book about?
Well, something that's interesting, probably a lot of people. I think something that has a big audience. It's not just something that I, as an author, want to know.
Right. Where do most investors lose clarity in decision making?
They lose it when the chips are down. When times are bad. That's when herd instincts and other psychological biases kick in, and this is actually where most money is lost.
All right. Well, that wraps up our rapid fire, Igor. Congratulations. You graduate to the next segment, which is Beyond the Bag.
Excellent.
Beyond the bag, beyond the bag, beyond the bag.
All right, Igor, what is in your bag, your travel bag, your suitcase, your thing that you travel with the most?
Well, it's something called the Powerball. That's like a training device for your arms. It's like an arm trainer, supposed to keep you fit, and it's very easy to keep it in the bag and keep it with you. They told me that astronauts are using this because it's kind of not dependent on gravity. I don't know if that's true, but I still like it.
Nice. I like that. Well, I don't want you to throw your Powerball at me when I'm in space someday with you on our extraterrestrial space travel, because it might be like a Pokeball, like just spawn some Pokemon in the middle of nowhere. No, I travel with chopsticks. So I've got these chopsticks. I do not travel without chopsticks. I often eat salad or soup with chopsticks. I know it's crazy. I tap into my South Korean roots there. Anyways, Igor, it has been a pleasure having you on the show. What is the best way for people to get connected with you and your book?
Well, the best way is just to go to my website, igorpejic.net, or sign up for my Substack newsletter, The New Frontier. And even better, pre-order my book, Tech Money, which is available in all of the retailers. of the book retailers. It's coming out in June, and it basically teaches investors how to ride those waves. It has a lot of those indicators and so on. So check it out. It's on Amazon, Barnes & Noble, wherever you get your books from. And, for everybody who pre-orders, just get in touch via info@igorpejic.net, and I have a special surprise for you. I'm giving away a free tech investing fundamentals course for my audience, and now for yours as well.
Wonderful. I love freebies. That is so wonderful. We're going to have to put that into the show notes. Well, folks, it was a pleasure having you on the show, Igor. Thank you so much for tuning into the David Daily. We will see you on the next episode.